Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, and we are having the final update of the financial year. The year looks to be closing on a bit of positives as the market seems to be back on the on sentiments. The Japanese inflation slowed further in the month of March after already seeing a sharp down move in the month of Feb. On the other hand, also Europe's biggest economy, Germany, saw inflation easing significantly. The consumer prices rose 7.8% against the 9.3% reported in the month of Feb. UK joins the Asia Pacific trade bloc, and the Fed balance sheet showed some drop for the first time in 4 weeks after the banking debacle. A lot of happening in the financial market, but all said and done, the week was somewhat muted when it comes to action. So, JK, what's your take on these things?
Good morning. Yes, it's the last update for the financial year. But we are ending on a very somber note. It was the third successive day of relative calm across the markets. Equities were a little higher. Dollar yields saw only modest moves, and the dollar index was softer. And the European yields, continued their uptrend after a surprise. Core inflation being higher in Germany. Yes, headline inflation was lower in Germany and Spain, but the core inflation remains sticky, and that makes us believe that ECB will keep to its rate hike path, particularly since the banking related issues are now actually receding. Apart from the German and Spain inflation, we also had data from US. The GDP came slightly lower than expected, 2.6% versus 2.7% expected. Previous number was 3.2%. And let's remember that Fed's projection for 2023 is 0.4% growth for the full year. And then we also had jobless claims, which slightly, went up at 1,98,000. But this was 1,96,000, but still we are seeing numbers which are consistently below 200,000. The labor market continues to be strong as far as US is concerned. We had quite a few Fed officials speaking yesterday. It was Barkin, Kashkari, and Collins. All of them were uniformly saying that the inflation fight is not yet over, and banking related problems obviously was something that could have been much larger, but if Fed took quick action. And so they think mostly that the Fed is not yet done with rate hikes. In fact, the Fed member, Mr. Brar, who was testifying to US lawmakers, said that all of us were caught incredibly off guard by a massive bank run that occurred, and the scope for blame lies across bank executives, Federal Reserve supervisors, and other regulators. So everyone at least is taking some responsibility, according to Brar. So as I said, the yields were lower across the yields were in fact very narrow ranged across the curve, and in fact only the German yields went up after the US data. And let's also, I need to point out also that Fed's calling specifically says that more tightening is needed, and there will be one more rate hike. That is what he's saying. And equities, yes, had another good day. Inflation figures somewhat, giving some comfort. The headline numbers, although sticky core inflation is slightly concerning. And we'll have Eurozone inflation today, PCE core inflation from the US. All of it will be closely watched. And as you mentioned, the Fed balance sheet falling for the first time in 4 weeks is also somewhat comforting. That means that the banks are actually not facing as much problems as it was once feared. We had data from China also today, PMI services and PMI manufacturing, both of them surprised to the upside. We have seen Chinese one strengthening. Dollar itself has been weak, dollar index, mainly led by the gains in euro. Euro is pushing towards 1.10, and dips have been quite shallow. And this is down to the reason that the differential between US and European yields are steadily narrowing, both on the short term, that is 2-year, as well as on the 10-year. So demand for the euro is definitely very good on dips. So overall, so that is actually pulling the other currencies also higher. Yes, we had a spike up in oil prices that has helped the Canadian dollar particularly, which was actually pushing above 1.38. Now it is towards 1.35. General commodity prices are well supported. The year-end factor of Japanese and yen buying against other currencies seems to have seen its again, although Japanese yen itself has pushed above 133 in Asian morning today. The Japanese 10-year yields, which had touched a low of 0.20, is now at 0.35 for, as against the 0.5 cap that the Japanese have put in. So I think going into the new financial year, interest will be surrounding what Japanese do in their next monetary policy meeting. Some bit of news on the bond market. That is, the FTSE says that India, Switzerland, and South Korea will remain on watch list for possible country reclassification and inclusion in the key government bond indices. In fact, Korea announced that they will be taking steps towards this goal. Of course, India's official stand is not been heard for quite a long time. So we still have to wait and see what they say about this, if at all. And the new foreign trade policy in India is also to be announced today. The government will, announce possibly some support for exporters, especially those in the MSME sector. Government also announced the borrowing program for the first half of 2024 FY, which is almost 57% of the full year borrowings. And it is across various tenors. And it will be interesting to see how the yields behave today, particularly after recent recovery in global yields. And also the borrowing program now means that a lot of supply will be there in the market. Now on to the rupee. Yes, on Friday we had general market selling, but nationalized banks were on the beat. But as has been seen off late, the offshore market keeps selling the USD INR, and then the USD gets supported by PSU banks. Now, as we step into the last day, we are into the last day of the financial year, we can just make some numbers study. We closed 2022 21-22 financial year at 75.90. We are assuming we are closing at 82 today. We will be depreciated by 8%, and this 8% devaluation year on year, that is financial year to financial year, is one of the highest after 2014. So that is something that we need to bear in mind. So maybe that's one reason why we may see some consolidation in the pair. Also to point out that in the last 10 years, from 2013 March end till 23 March end, rupee has depreciated by 51%. Average, if you take, it's about 5%. So we have depreciated more than the average of the last 10 years as well. So reasons to believe now that even the rupee RER is below 100, reasons to believe that downside for the rupee maybe less. And also interestingly, I have seen that the period of last 10 years when rupee depreciated by 51%, dollar index itself had gone up by 40%. So we were actually keeping in line with the dollar index. And now if we were to go by a majority view in the market that the dollar index has started the next cycle of downward shift, maybe rupee will have some catch up to do. Timing is very difficult to say because we have many election related uncertainties would be there in the year. First of the elections would be on May 10th in Karnataka, one of the largest states. It can be a hard year for how things go in the coming months. But yes, all in all, I think rupee will be a very interesting currency to trade in the coming financial year. Thank you.
Okay, JK, that was quite good. And yes, folks, we had a lot of data points being released in the last few days. Core inflation for Germany, as JK mentioned, continues to remain sticky, and which has kept ECB on their toes with respect to its rate hike path. We also had the US GDP numbers, jobless claims numbers, and many other inflation numbers being released. But what's what we have seen over the year has been quite significant. And it's a quick recap that we've seen a geopolitical war altogether. We have seen inflation rising quite significantly, and then a very interesting global synchronized tightening situation by the central banks. And now we also saw some bit of banking debacle. The sentiments have been all over the place for the whole year, and it seems that we are going to have another interesting year going forward with the kind of commentary that we just heard from JK, a possible down cycle of dollar and some catching up for INR to do with the elections coming up next year. Folks, I think it's good time that we start getting ready for a next interesting year. That's it for today, folks. We shall come back again on Monday, starting off a fresh year with fresh updates. Thank you so much for listening.